Assalamualaikum, I'm YAACOB. So I'm going to explain to you about the subprime mortgage crisis. So the subprime is for those who struggle to meet those standards and applying for the mortgage, and they have low credit score and having a problem with that. So the lenders who are going to lend their money to the borrowers, they will put high interest for their monthly payment. So, subprime mortgage crisis occurred where banks sold too many mortgage to those who demand for mortgage-backed securities through the secondary market. So, for example, it is involving the United States between 2007 until 2010, but it is called as global financial crisis between 2007 to 2008.
Hi, I am FARINA HANISA, and I am going to explain about the relation of financial institution and investor before subprime crisis. Before this crisis happened, investor was looking for a good investment to make more money, so they went to the United States Federal Reserve, where at that time they bought treasury bills as they believed that it is the safest investment. But on 11 September, the Federal Reserve Chairman, Alan Greenspan, lowered the interest rate to only 1% to keep the economy strong, and it is a very low return on investment. Thus, investors were not agree about that, but the banks on the Wall Street can borrow from the Federal for only 1%, and this lead to many of cheap credit and makes the borrowing money easy for bank, and they make money easily by using leverage. So the investors wanted to try and take action after hearing about that. Then the Wall Street connected the investor to the homeowners through mortgages.
I'm Muhammad FARIZAM bin Muhammad SAFFIE. For the first cause of the subprime mortgage is increase in subprime mortgage. This sudden increase in subprime mortgage was due in part to the Federal Reserve decision to significantly lower the federal fund rate to spur growth. People who could not afford home or get approved for the loan were suddenly qualifying for subprime loan, and choosing to buy an American home ownership rose exponentially. Housing price was also rising rapidly, and the number of the subprime mortgage given out was rising even more. For the second one is increase of interest rate in mortgage. When the Fed suddenly started to increase the interest rates, those with adjustable rates mortgage could not make this higher payment, and it caused demand for selling house fell, and so did the housing prices. When they could not sell their house, they also failed to pay. No one can price or sell, and an American international group, which is AIG, is almost bankrupt trying to protect the insurance.
So I will explain how the Wall Street made this subprime crisis worse, or to make it short, how it escalated. To illustrate this crisis, the homeowner that contact a mortgage broker will be connected to a lender who gives them a mortgage, so they will become homeowners. Then the investment bank called the lender to buy the mortgage, and after that the investment bank will keep going buying mortgages by borrowing $1 million and bundle them all together into mortgage-backed securities, which is MBS. All the homeowners of the mortgages will pay to the investment bank. So what makes this crisis worse? It all started when the expert at the investment bank converted the existing MBS to collateral debt obligation, which is CDO, and this is financial instrument has three layers, which are safe layer with less return, okay layer with moderate return, and risky layer with high return. Then all of these layers will be sold to investor. It can give the investor an asset to invest money to grow, and for the bank, they will make huge sums of money in commission fees without bearing any risk. After that, the investor found that this was a good investment for their money and they want more CDOs. So the investment banker calls up the lender wanting more mortgages. Then the lender will call up the broker for more homeowners, and the broker cannot find anyone. If the homeowners default on their mortgages, the lender gets the house. Since they are covered if the homeowners default, they can add risk to a new mortgages by reducing down payment, no proof of income, and no documents needed. And they created subprime mortgages. So anyone with no income that are not capable to buy a house from a lender can buy the house through subprime mortgage.
So we move to the insurance relation part. In this subprime crisis, the insurance company that called AIG, which is American International Group, security lending, which is financial activities that hold reserve and stock that will be invested in the financial security so that they can earn a return on the reserve. The firm can borrow the bond from an insurance company like AIG, and AIG will receive all the interest payment due on the bond. AIG wanted to generate cash quickly by taking 65% of the cash that it have received as collateral for its security lending. Those who had borrowed security from AIG realized that AIG was doing their cash collateral, and they start returning the securities and demanding cash back. Next, AIG also did a credit default swap. It is an agreement between the buyer of the credit default swap and the seller, which is AIG itself. This agreement is all about AIG compensating the buyer in the event of a debt default, whereby the buyer will get compensation if the seller, which is AIG, having credit default swap and need to cover for the loss. They sold the credit default swap on the corporate loans mortgage-backed security backed by subprime loan. Hence, in September 2008, AIG faced a bankruptcy due to the declining of housing price. US government announced their plan to bail out insurance company AIG, paying $85 billion for 80% of the company's asset.
For the bankruptcy, over 60 financial institutions worldwide that have been affected by the subprime crisis that happened between 2007 until 2009. The financial institutions include banks, saving and loan association, commercial and investment bank, building societies, and insurance companies. One of the financial institutions that collapsed during the subprime crisis is Lehman Brothers. Lehman Brothers filed for bankruptcy on September 15, 2008. Lehman Brothers was the fourth largest investment bank in the United States with 25,000 employees worldwide. It has 639 billion assets and 613 billion in liabilities. The subprime meltdown that swept through market and cost an estimated 10 trillion in lost economic. After that, the financial services firm was notified of pending credit downgrade due to its heavy position in subprime mortgage. The Federal Reserve then asked for several banks to negotiate financing for its reorganization. This discussion failed and Lehman filed a bankruptcy. It also gave a big impact on their stock in Dow Jones that dropped almost 4.5% for one day.
I want to discuss about government role when subprime crisis occur. The reserve dropped short-term interest rate to 3%. So this is the fourth time the Federal Reserve reduced short-term interest rate since September 2007 when interest rate is 5.25%. President George W. Bush signed contract Economic Stimulus Act of 2008 into law. Regulation provide the American with income tax rebates and give tax break for business purchasing new equipment. The U.S. Treasury take over management of Freddie Mac and the Federal Mortgage Association Fannie Mae as company announced to bail out the insurance company AIG, paying $85 billion to 80% of company assets. AIG was considered as one big company that too big to fail. It called to push a threat to American financial stability.
Assalamualaikum and very good day to everyone. My name is Muhammad Aslan MASKHADOV bin ABDUL LATIF. I will explain about how a subprime crisis in US can lead to a global financial crisis. First, it all started on September 2008. The US faced their largest bankruptcy in their history when the Lehman Brothers, an investment bank that have a $600 billion of assets, had to declare a bankruptcy. Upon hearing this, a lot of people with stock and bonds in the market start to put it out to place it in the treasury bond. This led to stock market index in US, which is Dow Jones Industrial Average (DJIA), or simply known as Dow Jones, to lose a lot of its value because of the stock market start to fall. It further affecting the banks and companies that using loan to operate now lose its vital financing and stock functioning. This affect US economies and the other countries that rely on US also be affected. And the same thing will happen to countries that has ties or rely on the affected countries. Then it will create a chain reaction that spread to other countries in the world and thus create a global financial crisis. Next is new laws enacted. Because of subprime crisis, new law is introduced on July 2010, which is called as Dodd-Frank Wall Street Reform Consumer Protection Act, or commonly referred to as the Dodd-Frank Law. It is a United States federal law. The law have made a change on the financial regulatory agency and also the national services industry. Dodd-Frank Law increase transparency and prevent the bank from taking on so much risk, and it also set out a Consumer Financial Protection Bureau, which is CFPB, in order to reduce the predatory lending and also protecting consumer against abuse related to credit card, mortgages and other financial products. That's all from me. Thank you very much.